Let me ask you a piercing, sophisticated question. How bad is it?
It's nowhere near 2008. So people who are thinking that the world is coming to an end here, it's not that bad. There's a natural floor to how low house prices can go because we don't have the same amount of supply we had then. In this instance, the supply shortage may help us keep from going way into the depths of recession.
So, Jerry, we have seen, although a huge pullback in terms of homebuilder sentiment. Your company has been tracking that. And at the same time, you have seen the number of starts surprise to the upside. I mean, how is this going to balance out going forward? Is this actually going to reduce supply even more and cause prices to remain even stickier because of the lack of sentiment, the lack of positivity there?
Well, it's not only that. I mean, the lack of sentiment, I think, reveals itself in the decline in the number of permits that are being taken out. And last month, all those starts were not down as much as we feared they would be. Permits were down more than they feared they would be. And permits reflect the planning. Now, obviously, you take out a permit in December, you're not going to start work until February, March. And if we keep seeing permits stay down or decline even more, it'll mean that the spring building season will be in real jeopardy. And that's really sort of the primary indicator for how the year will be.
How much does that factor into your call that you think that there's going to be about a 10% decline in pricing next year, housing prices, followed by a rebound in 2024? What's the nature of the rebound if it isn't fueled by rates, but is perhaps fueled by just simply a lack of demand that's exacerbated by a weak spring season?
Well, I think the rebound will be dependent in part, just like your previous guest said, on the Fed slowing down and interest rates coming down a little bit more. There's still also a great deal of pent-up demand. I mean, unfortunately, the housing sector never got back to full production after the Great Recession. We were just about to come over the top and get back to running on all cylinders when the pandemic hit.
Right.
So there's still a great deal of pent-up demand. I think that demand, combined with a growth in other areas of the economy, I think will bring us back in 24.
Hey, Jerry, I sat with a guy once, back of the envelope. I think the kitchen cost $250,000. The rap here in America is home builders have been forced into only building McMansions and mega properties for the fancy rich people, boxing out the greater middle class in home ownership. Now you've got the overlay of private equity money like Blackstone, and the scare tactics are buying up hundreds and hundreds and hundreds of homes. How does this play out? You've only been doing this with NAHB and National Realtors for like 400 years, Jerry. How does this play out? How do we get back to middle-class home ownership?
That is something that I've been harping on for a long time now. And this situation is caused by one thing: bad policies. Policies that repress the ability of a builder to build a house for a first-time home buyer. They just can't do it and make it pencil out. So they're forced to build what they can sell. And they can sell to the rich and the upper middle class, the affluent section. We need to get our policies back to where we are promoting home ownership through the tax code, which it doesn't anymore, through subsidies, but most importantly, through an evaluation of overall American housing policy. Right. That hasn't happened since 1990.
Come on, Jerry. I grew up in this. I can tell by your accent, it's not North Carolina, it's South Carolina. I want to build a $242,000 home in South Carolina somewhere with 4 bedrooms, a 2-car garage, and a kitchen that doesn't look like it's out of a sitcom in Hollywood. We're not building those homes, are we? Why?
We can do it in places like the Carolinas, like Texas, like Florida, that keep regulations low. In places like New York, Massachusetts, California.
Okay, what is
impossible.
New York? What in New York here? What does New York need to do to begin to mimic the success of the Carolinas?
Reassess its regulatory policies. And I'll give you the extreme example actually is San Diego County, California, where over 50%, that's 50% of the cost of building a new home is in regulatory compliance. That's absolutely ridiculous. And that's why San Diego County has housing haves and housing have-nots.
Jerry, just quickly here before we let you go, thank you for being with us. Going forward, after 2024, what will the nature of a housing market look like, given that it really grew up under this ultra low and dropping rates? Do you see a sort of slow grind with much more stable valuations?
Yes, I do see a return to what would have been pre-Great Recession normalcy, where you'll see production equal out and top out at what it should be. And I think you'll see that bring stability back to the housing markets. Housing will always be a good investment because it is subject to so many vagaries in policy machinations. But I think you'll see a much more stable market in 24 and beyond.